Every day, the United States brings in over 4.3 million barrels of oil from its neighbor, Canada.
When it comes to Canadian steel, more than 90% of exports go to the U.S. Ontario is the hub, home to half of Canada's steel plants.
In fact, nearly 60% of all the oil the U.S. gets from around the world comes from Canada. But if Canada decides to reduce these shipments, gas prices could jump, refineries might slow down or even shut down, and the whole country could face a big energy problem.
We read in Politico that Ontario Premier Doug Ford threatened to shut off his province's electricity exports to the United States.
For many years, the U.S. and Canada have shared a strong bond when it comes to energy. More than 90% of the oil Canada sells travels straight to the U.S., moving along huge pipelines and shipping routes. U.S. refineries, especially those in the Midwest, are designed to work with the heavy oil from Canada, not the lighter oil from other parts of the world. This setup has been a win-win. Canada enjoys a steady market for its oil, and the U.S. benefits from a dependable supply that isn't affected by problems in other regions like the Middle East. But lately, things have gotten a bit tense. Disagreements over trade have spilled over into various sectors like cars, dairy, and even high-tech gadgets, leaving many Canadian businesses uncertain about the future. In response, Canada is starting to look for new friends in the world of trade. The European Union, with its 500 million consumers, and the United Kingdom, even after leaving the EU, are catching Canada's eye as fresh trade partners. Agreements like CETA with the EU and a new post-Brexit deal with the UK are paving the way for Canada to reach more markets and reduce its heavy reliance on the US.
CETA was finally signed by Belgium this weekend, paving the way for Sunday's much-delayed visit by the Canadian Premier to Brussels.
This leads us to a big question. Can Canada truly branch out and become less dependent on its longtime partner? Or will practical needs keep them closely linked? One interesting idea making the rounds is called the Canza project. It's a proposal for Canada to form a trade and economic group with the UK, Australia, and New Zealand. A club where they could trade freely, let workers move around with ease, and share common legal and political values. Canza could give Canada a chance to create a more balanced and stable trading relationship. With deals already in place, like the one with the EU, Canada is already expanding its market to over 500 million people. And combining this with new alliances might help smooth out the bumps caused by trade disputes. However, it's important to note that Canada isn't planning to cut ties with the US completely. Instead, by building extra partnerships, Canada is making sure its economy stays strong even if unexpected challenges arise. By teaming up with other stable and prosperous nations, Canada is working towards a future where its economic growth is both sustainable and secure. Could Canada be gearing up for its biggest trade shakeup since NAFTA? Right now, Canada stands at a major fork in the road when it comes to international trade and partnerships. For years, Canada and the US have been close, but lately, things are changing. Some in Canada are starting to question if sticking with the US is the best move, especially after some harsh words from US leaders that didn't sit well with many Canadians. Instead, Canada is eyeing Europe, a place known for strong economies and shared values like democracy and human rights. One idea that's been floating around is called Canza. This plan would see Canada team up with the UK, Australia, and New Zealand to form a new economic club. Imagine a group where trade is easier, rules are similar, and people can move and work freely. It's a fresh way for Canada to reduce its heavy reliance on the US while opening doors to new opportunities. The shift isn't just about making new friends overseas. It's also sparking changes at home. Many Canadians are even boycotting U.S. products as a way to show they stand by their values.
Well, Canada's built its entire economy on this idea of trade and access to the U.S. market. So limiting that will lead to deep recession. It's going to be bad for the U.S. as well, but
this growing trend could seriously challenge U.S. companies, forcing them to rethink how they do business globally. By turning to Europe and forming new alliances, Canada hopes to boost its trade and security. A stronger partnership with Europe could mean better access to markets, more cooperation on global issues, and even help protect against threats from other world powers. So, could this new direction really shake up the U.S. economy? while some worry it might lead to job losses in the U.S. Canada's move is less about cutting ties and more about building extra support. With new trade deals and partnerships, Canada is trying to make sure it's prepared for whatever the future holds, creating a balanced relationship where it isn't solely dependent on one neighbor. Politics and the actions of everyday Canadians are completely changing how Canada and the U.S. get along. After a short break from extra tariffs, things between the two neighbors calmed a bit, but the tension is still there. Canadian leaders are not just trying to cool things down. They're also looking to make new friends in Europe and other parts of the world so they don't rely only on the U.S. Some heated comments, like the U.S. president joking that Canada could be the 51st state, made many Canadians feel disrespected, and that sparked a strong desire to stand up for their country.
Sat at the same table saying Trump suggested Canada could become the 51st state if Trudeau didn't like the tariffs.
People all over Canada started showing their pride and defending their values. A popular hashtag, Boycott USA, spread like wildfire on social media as millions shared their support for buying Canadian and European goods instead. Many families even canceled trips to the U.S. to help protect Canada's economy. And signs like, "Canada is not for sale," and the sight of the Canadian flag became symbols of their determination. These actions are having real effects. For example, Canadian airlines like WestJet saw bookings for U.S. flights drop by up to 25%, which means fewer flights and changes in schedules. The U.S. tourism industry lost an estimated $2.1 billion, and around 14,000 jobs were affected. It wasn't just airlines. Hotels, restaurants, and stores in the U.S. felt the pinch, too. The U.S. and Canada have always shared a close economic bond, trading goods worth about $1.2 trillion every year. They depend on each other for many things like energy, cars, metals, and food. Even a small break in this connection can shake prices, supply lines, and jobs on both sides of the border. Canada's bold moves are a big reminder that in our global world, every decision can send shockwaves far beyond one country. Now, the U.S. has to rethink its own plans at home and abroad. The big question remains, is Canada's push to branch out a warning of a bigger economic storm? And how will the U.S. react to these unexpected changes? Thanks for watching. Do not forget to subscribe to our channel and activate the notification bell.